I call this pattern a pyramid pattern. As you can see, it's in the shape of the top of a pyramid, and this pattern is specific to S&P 500 M-Mini futures. So if you're trading S&P 500 M-Mini futures, pay attention now, because in my previous video I said that the rally in the morning session, sometimes it may not even get retested. We may not get a retest of a new high, and I'm going to show you. Just wait a minute. Here we got the video from September 2nd, and this is the same pyramid pattern, and you can see that we got a trend line working up higher in the morning session. And I was actually talking about this in this video, and I stated it was for very advanced traders, that sometimes the rally up in the morning session in S&P 500 M-Mini futures will not even get retested. The new highs will not get retested. And as you can see, this is a very similar pattern. You got a trend line working up, and it spikes down, making a shape of a pyramid, and then finds a support around, let's say, 60-70% Fibonacci retracement. And the same thing happened today. The rally in the overnight, in the morning session, we don't have a retest of a new high, and it made the pyramid pattern working lower. And once again, we found a pattern, we found a support in the 60 to 70%. Let me see exactly what it is. Fibonacci retracements. Let's put it right here. Yeah, see, perfect 6180. This is the most common, I think. Now, personally, I don't trade Fibonacci retracements, but definitely some traders use it to advantage. They just use it as a tool to kind of make decisions as they read the chart. And actually, some trader was asking me if I ever used Fibonacci retracement, and no, I don't use it. But over the years, looking at the charts, I definitely saw some consistency with those percentage findings, supports, and resistance. So it's definitely probably valid. And if you are a Fibonacci retracement trader, I'm not gonna knock you for this. I think you can actually be profitable using Fibonacci, because there is definitely, the patterns repeat themselves, and you can clearly see that this pattern is very similar to this one. And this is why I advocate you only stick to one market in one time frame. I mean, mainly one market. You can choose more time frames, but I would still stick to only one market, because every market has its own tendencies and its own nuances, and you want to learn how the traders you trade every day with, how they act, and how the institutions, how the hedge fund managers, how the big players, how they make their decisions every single day on the single market. And if you're not trading S&P 500, M-Mini futures, maybe you're trading Forex, I started trading Forex, maybe you're trading, stocks, maybe you're trading, different commodities. Learn the pattern and learn the nuances of your single market. You don't want to use multiple screens. When you see these 5 flashy screens, yeah, they look flashy. Somebody's trading 5 charts, but they don't know what the heck they're doing. They're just losing money. It just looks cool. This is why they're selling it. They just put it on the thumbnail because it looks cool that they are, having 5 monitors and they're looking 5 different charts. But no, the real professional traders, real price action profitable, consistently profitable traders, they trade only one market, and they're masters at the one market. It's like anything in life. If you want to be good at boxing, you only box. You don't want to be, NBA player, soccer player, and then the boxer. No, you only stick to one area, and same goes for trading. So anyway, this was the rally today, and we kind of found a little bit support here. This was the first trade I took. I treated this as a failed break lower below the support. One low, double top, double bottom, triple bottom, failed break lower. I knew we were gonna get scalped back to the EMA, back to this trend line, and we did. And then this is where you want to go short, because as you can see, first entry long, pull back, second entry long, that failed, even though technically it didn't fail, but It's off the trend line. It's a failed second entry long, and we're now, you know, this is looking like the pyramid pattern, and you want to short this. This is obviously this is very advanced trade, and I took it because I'm much more experienced. But you only want to wait for this. This is the better setup because this is a pyramid pattern, as we saw earlier, that it repeats. All the patterns repeat. It's not going to work every time, but there is consistent, profitability. You can be consistent profit. This is why technical analysis works, because the patterns repeat themselves, on a base-to-base basis. And then we're working lower. EMA showing you that we're now in a downtrending correction, and we have first entry short, pullback, second entry short. Market moves in twos. I'm going to show you a little bit so you can see it. You can see this is first leg up. This is a little bit doji. Prices broke below. This is first attempt by the bears to go lower, and second leg up. Prices moves in twos. Market moves in twos. Look at this. First leg at pull. First entry, second entry, one leg, second leg. Market moves in twos. One leg, second leg. So I went short here, and this is where you want to go short here. Quick, easy scalp. And now you have a new low. Prices made one more push into the new low. And once again, this is very similar repeat pattern. I'm going to show you in just a minute. And this is once again the very similar pattern. Look at the correction working lower. Look at the downtrend working lower. Break and a big spike down. Very steep. And look how similar it looks to this pattern. Correction working lower, break, and a big steep spike down. And this big steep spike down, it will usually lead to strong support, because this is so steep, the prices will not continue lower and lower. This will establish a new support. And once again, this happened here. Working lower, big steep spike down, and it established a support. So the market technical analysis works, and it repeats itself over and over. Not every time is going to work, obviously, and not everything is 100%. It's going to fail. Everybody has losers, obviously. But you can be 70 or 80%, even 90% profitable, and make some good money. So as we made support here, you wouldn't have seen it yet, but I kind of knew we might bottom down here. We're working higher. First entry short, pullback, second entry short. You don't want to go short because this correction played out already. Price action rules. Remember, always keep in mind our rules. And but I don't think you want to take this trap yet long, because you never know. We might chop here, and we might make a little bit more push down, but you're not 100% sure. But once we trap them here, look at this bearish bar, and we take one tick below, and prices instantly reverse. This is what I call a trap. When you take one or two ticks below and instantly reverse on a one single bar, this is what's called a trap, and you want to trade this. So even though I teach you take only failed second entries, which would be first entry, second entry. This trade would be failed second entry short. This is failed third entry short. Nevertheless, this is good entry. It's still off the trend line. It's on the EMA. You can see this is how you use EMA also. You can see how the EMA now acts as a support, and kind of like stairs. Prices move up, and they're on the stair, and they're on the support, and now it's going higher. This is like you're going upstairs. One leg up, second stair, and third stair. If you can see what I mean, hopefully. Hopefully I'm not too this is maybe it's just me. Anyway, we're working higher. Quick scalp. You don't get a runner off of it, sadly, but there's this support forming, and then we pull back below EMA. First entry long, pull back, second entry long. Now I teach you to always wait for the trend lines to play higher, to play out, and we were looking for higher high here because the break and a new high. But a lot of times in the trading ranges, remember this, pay attention. If you're trading training range, the short-term trend lines will not get retested. So if you were looking to go long here, yeah, you're following the rules, which is okay. But this is when experience comes into play, because when you're starting to be working in a trading range, the lower highs and lower lows, meaning the new retest, the break and a new high, and a break and a new low in trading ranges, it may not always happen. So this is when, I mean, you want to really kind of not looking for new high and new lows in a trading range. I mean, it's okay if you didn't take this if you're new, because if you're new, you're looking for new high. And why you're not taking these trades, I'm going to explain. First of all, this is just the first entry. So this was the second entry, but this is already way too low, and it is below EMA. Look how the EMA acts now as a resistance, and prices shot through the EMA. So this EMA, it didn't hold at all, and you don't want to be looking long because you're now way too lower, and this correction is way too big, and you're in a trading range. The trading range moves up, down, up, down, up, down. So this was a good failed second entry long, and this is nice bearish bar, and the EMA is holding like resistance. This was a good trade, good scalp, and now we're just chopping lower, lower. I mean, I don't think you want to go long here. This is too. It is a failed break, but this is too big of a bar, and this is another failed break of trading range, which I always tell you should take. But I mean, really, this is really hard to take, honestly. I mean, hopefully you agree with me. This is because we should have spiked rally up higher from here. This should have been the break, failed break lower. It turned out this was eventually the failed break lower. Sometimes this will happen. Market will shake out weak longs and weak shorts. So this is what they did. They just shake the weak longs out just to even just to trap more bears, and then it rallied up. I don't see any setup here. You're way away from EMA. And once again, this is gonna be another. I'm gonna mark it, even though I didn't take this trade, and I don't advocate for taking this. I'm just gonna mark it for this purpose because we're talking about this bar. This is the day of repeat patterns, and pay attention. You can see that we're working higher, and we're very far away from EMA, and we have a first entry, second entry, and kind of like third entry higher. I was really tempted to take this. You're far away from EMA, and I'm going to show you what pattern it is similar to again. And once again, this is probably my third video I filmed. Look at this. We're working higher, and you can see the similarity. We are far away from EMA, and we are moving first entry, second entry, third entry. We're kind of like trying to get higher, but we're still far away from EMA. And this was the trade I took on that day. And if you look at this, this is very similar. We're just spiking up and down, and we're far away from EMA. I mean, to my eyes, this is look very familiar. This is very similar. I hope maybe if you're newer, this doesn't look that the same too because you haven't trained your eyes yet. But trust me, if you just stick to your one market, you will find its tendencies, and you will find so many repeat patterns that sometimes it will see like it's not even possible. You're you're gonna be like, I, I have already traded this day. Is this glitch in matrix, or what the heck is going on? So this is why you need to study your charts after every single day you trade, so that you kind of learn uh, the similarities, and get it embedded in your brain. I mean, obviously you don't want to memorize it religiously, because every day is going to be different, and there are so many variables, and you don't want to you cannot memorize every single variable. This is not, don't take me the wrong way. You just want to get the feel that when you're going to be doing this for a long time, you will definitely start getting the gut feeling like, yeah, I've seen it before, and this is probably high probability trade. So I didn't take it because I was still kind of hoping for new high. It was kind of my mental mistake. I should have gone short here. But this is part of trading. You're making a mistake. This was the better entry to go short, because you move from the You go through the EMA. This is trading range. This is failed break higher, and you go through the trading range. Pull back below the EMA. You're now working lower. I don't like taking any of these trades. This is look at the stems. So many stems here. You're already at the down of the trading range. Here they found support. You bounce higher from here. So this is very, this day served as a lesson for many repeat patterns. And once again, it doesn't matter what market you trade. Every market has its own tendencies. If you're trading, euro dollar or Aussie dollar or whatever, if you're trading Bitcoin, if you're trading gold, Dow Jones, oil, stocks, Apple, everything has its own tendencies, and you just want to learn it. But overall, price action works on every market. You can find this pattern. This day, I bet you I can find this in Forex, in stocks, in gold, because price action looks the same on every market. I guarantee you that. So hopefully this video was insightful to you. If you liked it, click the like button, and if you got any questions, definitely don't hesitate to ask me in the comments. I will reply. So hopefully you had a great day, and keep studying, and I see you next lesson. See you guys.